The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits. What's happening, Octo family? So I was going to go after the normal Sunday chart day, and looking at the charts, everything's almost at all-time highs. And when you get there, I think the best position to take is a defensive position. So if everything is sitting high, you kind of just gotta, you want to stay in your positions because stuff could just keep going up, but you need to watch it. And if you don't have time to watch it, I would suggest maybe getting out of some of your sketchy plays right now, because a lot of times when all sectors are going up, they like to all go back down, right? So just watch it. Be on the prowl. Go into maybe half cash right now, right out the gate after the big pop at the open probably might not be too bad of an idea. What's the moral of my story? My moral story is just sit back, be in defense, go to cash if you can, at least for maybe half or something like that. It's just when stuff is this high, it's wonky. We could get maybe it's a good time to buy a hedge again. Talk about buying hedges, but remember when you buy these hedges we talk about, if you don't know what I'm talking about, watch my videos what to do when the stock market is going down, how to make money like a boss when everything's going down. You only want to stay in those for 2, 3, 4 days, right? Just to protect yourself on times like right now when everything is looking green and everyone's excited, people are still buying. Just wait a little bit. Might a little bit more consolidation. Obviously, new LOIs on SPACs and stuff, you're usually good to go. Brand new catalysts, usually good to go, but I wouldn't be entering a long position tomorrow, per se, right? Unless we had a major catalyst. So just keep that in mind. Regardless, of course, I got a pivot for you. This is something I've already released to the fam, to the group here, but we're gonna be talking about Lucid. And I get this question so often, basically, should I get the warrants? Should I get the commons? They have options and all sorts of other ways to buy stuff. Which one should I get? So we're gonna talk about that. We're gonna wrap it into Lucid here and go over some plays, specifics on it, calculated some stuff out for you. If CCIV, Mr. Klein, does go Lucid, can they hit QS, QuantumScape, those solid state batteries? Can we hit QS numbers? I don't see why not. Why not? To me, Lucid is way cooler than QuantumScape batteries, who aren't going to be out for another 4 years-ish. The solid state battery, I can name 2 or 3 other companies that have the same technology, maybe even better. The fact that thing went over 100 still blows my mind. But also opens up the gates for stuff like Lucid, where I look at it if QuantumScape can hit 100, why can't Lucid? Why can't it? It's already at $22. I don't know, y'all. Not only that, did it hit 100? Yeah, it gapped all the way to $132. I'm pretty sure that's a record for SPAC. Let me know if there's something else I'm missing, but that is insane. Remember when we thought 50 was the all-time high for Nikola, or 60 or whatever that got to? QuantumScape got 130. Unbelievable. Now, the chart past that, it's only sitting about 50, but even CCIV at 50 is fantastic. But why wouldn't it hit? Why wouldn't it? I mean, it's cooler. The hype is probably the biggest I've ever seen for a SPAC, hands down, especially pre-LOI. I don't know. What do you think? Let's talk about the warrants and look about those wants. Y'all ever gotten a warrant before? QS warrants? Where did those go to? Those went to 40. Let's just call it 40, $42. And those settled down to about 33. That's where your probably VWAP is. Your VWAP about that. That's probably where those sitting. Where are we sitting for CCIV right now? Well, we're sitting at $23.42 for the commons, and we're sitting at $9.20 for the warrants without an LOI. Remember QS, I mean, that thing, I remember out the gate, right when we had an opportunity, I think $12 to be buying in. Still it's pretty cool. I'll throw a little bit of chips, but I had no idea it was going to go 10x. 10x your money. Pretty crazy. So, from the commons, if the commons right now that are sitting for CCIV at $23.42, if they go to $99, let's just call it 99. Let's not even go there yet. Let's not even go to 130 yet. If it only goes to 99, That's still a 343% increase on your monies from right now, which is pretty incredible. How about if the commons go from 2342 to 130, which is where QS actually went to, 130? That's a 455%, 480% increase on your money. This is the stuff that keeps me up tonight. What if I can 5x? What if I can 3x my money? What if I can 5x? What if it can hit those QS numbers? How could I gain even more leverage? That's what keeps me up at night. Well, I calculated for us. How about the warrants? So if the warrants are at $9.20 and they hit to 30, just to 30, remember QS went to 40, that's a 226% increase, which is a lot lower than the commons. Y'all heard me talk about this casually, but this is some hard numbers here. If the warrants go to 40, that puts us at 334.78% increase on your money. But that's still way behind the commons sitting at 455%. You learning something yet? Yeah, but what about the options, bro? We gotta talk options. So, CCIV at 2206 on the 23rd of January 2021, which is right now, right? Your entry cost to get in for an option. So this is put out all the way to like August 10th. I think it's their longest out call you can get. So as shown, we can get, if we were just buying regular commons, you'd get about a 450 to 480% increase on your money. All right. If you were to have the options though, you're looking at 859% on your money. Which would make 480% on your money or 859% on your money. That's the stuff that keeps me up at night. So at $128, if the commons get to 128, we will be at 859% on the option instead of 480%. If you look at the real money here, so we're starting with $1,230. That's the cost to entry for one of those call options. At 480%, just with the commons, right? Not with the options. At 480%, your $1,230 goes to $7,134, which is fantastic. Any investor all day long would take a 480% increase. But check this out. What if you took that $1,230 and bought a call option, and we hit the 130? So the commons went to 130, but we bought the calls instead of the commons, and it went up 859%. Our $1,230 initial investment turned into $11,795.70. Which would make $7,000. Would rather go to $7,100 or $11,795. I'll let you figure that out. There's a little bit more risk with the options, of course. Not everything's free, but something to keep in mind, right? So the estimated returns we're looking at here at a different call option. This one is going to be if we're buying now for Monday morning. Our entry cost on this option we're talking about today is $700. $700. And this one here is a February, I believe, 22nd call or $20 call. All right. So this one's a little bit more risky because we don't have as much time out to get to the price point, and it's closer to where the price is at. So the other one, we had a floor basically at like $10. This one's like if we were to get like 18. So this one's more risky. Check this out. So if we were to put in $700 in commons, we would get a 348% increase, which would bring us to $3,141.60. Now, if we were to buy $700 worth of options, that were more risky, it would give us a 957% increase on our money. So our $700 would go to $7,399. So you see, the more risky of an option you buy, the more money you can make, the higher the multiples. Because remember, the last one was only 800 some percent. If you buy it closer to the date, closer to where we are now, 957% up. Which is absolutely awesome if you ask me. So which one is best? Which one's going to give us the best success rate? Well, if Mr. Klein makes Mr. Deal, if he makes the deal of a lifetime, what's going to make us have the best, biggest happy dance ever? Options. Remember, this is if we get this LOI, right? Why? Because it's the best multiplier, right? It's the best multiplier. If we get to 100, we are multiplying like crazy. Almost 10x your money. Problem with the options, though, it's the highest risk. Because like I was saying, with a lot of things kind of rocketing into the week last week, there's a big chance that this week we're going to get a little pop and then we're going to get a dip. So if we don't get an LOI right away, your options could start going south real fast. Second option is commons. All right, you can get commons. This is the second best multiplier. Does that blow your mind? Has any other channel showed you that? Commons, where they're at after stuff is run, after the warrants get to a certain point, they get capped out by multiplication because of retail. Because remember, most retail can't and won't buy warrants because, number one, they can't. They're not on the brokers. And number two, they don't understand them. So people just like, I don't like warrants. I don't like the name warrants. Just stay away from warrants, right? The other deal about commons is they carry the least amount of risk. Because remember, commons still have that floor of $10. So even if you bought it like 23, they go down to $10. You're only losing what? 56% of your money, something like that. It's a lot better than, like these warrants. They could go from $9.20 all the way down to $1.10 again. Do the math on that real quick. But the options can go to zero. Right? Just keep that in mind. So the warrants are still risky, not as high a risk as options, and they're the worst at multiplying where we sit according to history. Now, could all the tables turn and magically warrants just start overrunning everything? Yeah, but why would that happen? I'm showing me a SPAC where that did happen, where we got some crazy numbers like this that we're talking about. Or if I've been calculating this out for a long time and I already got it figured out. This is stuff that I've been releasing and talking to my group about a lot. But this is laying it out as smooth and as easy as possible with real numbers. So one of our Patreon, he wrote and said, dude, check out this interview. This was a teaser at 6:55 p.m. Friday. And here is what they said. Who is this? This is Yasir Al-Rahmi. He is the dude for the Saudi Aramco. Remember all the connections with the Saudi Wealth Fund and all that stuff, and Klein. And if you haven't seen my past videos, go watch them. He said, the pandemic impact on the oil demand and prospects for the sector, new policy shifts in outlook for investors. In addition to his role at Saudi Aramco, he was highlighted as governor of the Public Interest Investment Fund. And he took this picture for us. Not only that, he hooked us up with the video. The video is on my site. I'm not going to play the video for a live here because sometimes when I do that, YouTube removes my video. Because like if these guys got a copyright, I can get in trouble for it. Now, did you catch what I was saying in here? Did you catch any nuggets in there? There's been an impact on oil demand and the prospects for the sector. So new policy shifts in outlook for investors. So that's exactly what I've been saying. I've been saying for months that Lucid is easily Saudi Arabia's hedge against oil. They're smart enough to know oil's going to keep going down. And they know what EV means. EV means no oil. No oil changes, no gasoline. So how are they going to combat that? They're going to own a rock star electronic vehicle company. In fact, they own 67% of it now. Think about that. So are we going to get something Monday morning? Maybe tonight? I don't know. Nobody, in fact, well, some people know, but none of us regulars know. Is this dude going to announce it live on air? I'd say probably not, but if we can get a little hint out of him, I'll take it. I'll take any more little hint. We could get it right before, and then he talks about it then. But again, he's talking about prospects within the sector in order to combat the loss of oil demand. I hope they talk about Lucid. I'm going to be watching this. I might do it live. I might do it live for y'all. We'll have to take a look together. What do you think? We're going to get any news from them? I don't know. I hope we kind of finish it up this week. I think it'd be good. Beginning of the week, I'll take pre-market. I'll take Monday night. Probably this week though, because we're at like super duper hype, and if they wait another month or two, which they probably won't, we're going to lose a lot of that momentum. We want to keep the wheels a turning. That's why I'm happy he's going on. So also one of our patrons gave us this on Arab News. The Crown Prince announced new 5-year strategy for the kingdom's economy. If you want to go there, look at the link right above. Jeddah Saudi Crown Prince Mohammed bin Salman said Sunday launched a 5-year strategy for the kingdom's sovereign wealth fund as Saudi Arabia drives toward achieving its Vision 2030 goal of diversifying the economy away from dependence on oil. Did you know Lucid has already got big battery backups? You think they're going to get into solar? Think they already have it? I do. He also said he's going to contribute $320 billion to non-oil GDP and create 1.8 million jobs by 2025, said the Crown Prince, the fund's chairman. And above all that, if you're still worried, just remember Mr. Chamath wanted everyone to know that everything is going to be all right. Still not convinced. Mr. Patrick Collison, y'all remember him from Stripe? This is his most recent tweet, and I think this is really crucial. Home of the P&J, magical squirrels.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.